trade, these massive budget deficits, it also attracts the world's savings to fund all of it. Right? That's what we call the carry, and it shows up on the balance sheet. Now, if you add up everything the U.S. owns abroad versus what foreigners own here, the U.S. is now negative by $26 trillion. That's the net international investment position. Think about that. The world owns $26 trillion more of America than America owns of the world. And yet the system, it still runs because the rest of the world wants those dollar assets. That's the power of having the reserve currency. But now here's where the imperial part comes in. When the Fed cuts rates or launches QE, which is coming, it pumps liquidity into the markets. Asset prices rise, stocks, homes, bonds, all that creates what economists at the New York Fed call the quote, wealth effect, right? Now, they've studied this for decades. For every dollar of stock market wealth, Americans spend about 2 or 3 cents more. That extra spending boosts GDP. It makes the economy look really strong, and it attracts even more global capital that's chasing those rising nominal returns. It's basically one giant feedback loop. Policy creates asset inflation. Asset inflation creates consumption. Consumption attracts capital, and that capital funds the next deficit. Round and round and round the flywheel goes. But every carry trade, it has a hidden risk. Because all those foreign investors, the ones that are holding U.S. bonds and holding stocks, they're taking currency risk. If the dollar weakens or inflation runs hot, they're the ones that are going to eat the loss in real terms, right? The U.S. gets to inflate away part of its debt burden, but the foreign holders, they lose purchasing power. That's why I call it the imperial carry trade, right? It's the modern version of what every single empire does in its final phase. It uses currency privilege to siphon the world's wealth, inflate domestically, inflate asset prices, and quietly export the losses abroad. It's elegant, it's great, but it's temporary because no empire can keep this carry trade going forever. And when that carry unwinds, when the world no longer wants to hold melting dollar claims, well, the illusion starts to break. That's when the real scoreboard starts to matter. And when we switch to something else, a different scoreboard, when we measure something else other than in dollars, let's say we measure it in gold, we measure it in Bitcoin, that you'll see how far the system has already fallen. Okay, so now, to really see this, to really understand this, let's measure the markets using 3 different yardsticks. We'll measure it in the dollar, we'll measure it in gold, and then we'll measure it in Bitcoin. And that way we can see the story that each one of these yardsticks tell us. So let's look at, first we'll look at the dollar. We'll call it the